Hello and welcome to the week ahead video. A couple of things to brief you on ahead of the next 5 trading sessions. Then a lot of focus is still on the geopolitical tensions, not just now in eastern Ukraine, but also of course in the Middle East as Sunni insurgents make their way through the northern regions of Iraq, closer and closer to Baghdad. This has supported particularly oil prices over the past week or so, pushing Brent prices up to 9-month highs. As such, any further mobilisation of Sunni insurgent troops will likely take the focus of the market, particularly the energy complex, as the Kirkuk-Shehan pipeline does remain targeted by these insurgents, which could potentially disrupt future supply out of Iraq, particularly through that northern border with Turkey. Separately then in eastern Ukraine, we have seen some further violence as a military transport plane was shot down over eastern Ukraine by pro-Russian separatists over the weekend, which resulted in one of the largest days of fatalities in the Ukrainian conflict so far, with 49 deaths being recorded. As such, the new Ukrainian President Poroshenko has warned that he is to pursue further sanctions should the unrest continue over in eastern Ukraine. Separately though, in economic events this week, we have the much-awaited FOMC rate decision, which will come with the latest summary of economic projections. The Federal Reserve are expected to cut not just their inflation, but also their unemployment rate outlook. However, Janet Yellen, in the subsequent press conference, will be very, very keen to avoid the mistake she made last time, where she put a time period on just how soon rates could rise once the quantitative easing program comes to a conclusion. So if you do recall, she did mention that 6 months could be a likely time period, but she's likely to avoid this topic altogether at the Fed presser this week. Elsewhere out of central banks, we have the Bank of England minutes, which will take some particular importance given the comments we saw from the Bank of England Governor Mark Carney at his Mansion House speech last Thursday, where he commented that rates could rise sooner than financial markets currently expect. This did prompt a lot of analysts and the markets themselves to rush forward their expectations for a rate hike from the BOE, with many now going for as soon as Q3 2014 as the first hike from historic lows at the bank rate at 0.5%. As such, all eyes will turn to those BOE MPC minutes on Wednesday. Finally though, this Friday sees quadruple witching, so there are multiple expirations of stocks as well as stock index futures, so likely see some volatility, particularly in the US asset classes as we head through in towards Friday. We'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic 5 days of trade.